A New Perspective explores breakthrough strategies, techniques, and technologies with leading industry experts to optimize human mind, body, and spirit. A better you enriches the community around you and progressively renews the world. We are a community dedicated to that impact. Welcome to A New Perspective.
Ladies and gentlemen, welcome to A New Perspective. I am joined today with two new friends of mine. Drove all the way in from Dallas down here to Austin, Texas. And today we are talking real estate, making money in real estate, whether you're somebody who's actively in it or just passively want to invest in real estate, have this be kind of one of your dreams. So Dustin, Hayden, thank you guys for being here. Appreciate it.
Yeah, excited to be here. Thank you.
Yeah, definitely. So let me frame the conversation I kind of want to just dive into with you guys. So I think I think there's been more millionaires created in real estate than any other vehicle in America.
Yep.
I think kind of the quintessential like making it mogul in America is like the real estate tycoon. Everybody kind of wants a piece of it in some way. I think everybody's maybe long-term kind of strategy is like, I think I could like own a rental property or two or something like that. But you guys have taken a very different approach to it, so I'm excited to have the conversation with you guys today.
Awesome.
Yeah, definitely.
Cool.
So let's just dive in, man. Let me kind of frame, I guess, in my own personal life too. So my dad has his general contracting license. He's a general contractor. My mom ran a general contracting company.
Wow.
My brother's a realtor. Our family dream for a long time has been to do real estate development, right? And so all of us have kind of our normal day gigs, but like the end goal long term is once we've arrived and we've got money, like we want to like build stuff as a family.
Yeah.
How did you get into this? How did you get into this whole thing?
Yeah. So it's been a fairly long journey. I don't have none of my family was in real estate really before. I found out this fairly recently, but I had a great grandfather that was a professor at UT. He taught economics, and funny enough, I found out he owned mobile home parks.
No way.
I didn't. Yeah,
Right on.
learned that pretty recently. But yeah, in general, as a little kid, I played on a soccer team, and one of the people I played with, their family owned real estate and on a very large scale. They own skyscrapers in downtown Fort Worth, and you go to their house and you're like, oh my gosh, these people doing well, right? And so that really kind of piqued my interest. I remember I was probably a weird kid, but I remember I would ride my bike around town because that's what you at least used to do. I don't know what kids do now.
Yeah, play video games.
I guess play video games. Yeah, but I used to ride my bike around town, and oddly enough, I'd be like, who owns all this stuff?
Right.
And so, played soccer with a kid. I was like, oh, that's one. And so, I was really interested in real estate. Got into single family about 10 to 15 years ago, and, started networking around. And I remember I met this guy, and his name's Ralph, and still a friend of mine today. I remember I met him at a meetup. So most of the people I knew had a few single family, and that was pretty much it. This guy owned 22 units, and it was a mind blown situation. I remember I met him at this meetup, and I didn't get his contact information, just a bonehead move. And so I emailed the person that ran the meetup. I was like, I really want to meet this. I want to talk to him more. I want to take him to lunch, all this other stuff. And so anyways, started, I tracked him down and went and had lunch with him, and I was just fascinated because he lived in Dallas, 22 units in Lawton, Oklahoma.
Wow.
And I was just like, wow, I didn't know normal people could do that.
And he was willing to talk to you, which is
yeah. So met with him, and then met with other people who in 50 units, 100 units, 1,000 units, 10,000 units, and so I was like, they're normal people.
Sure.
Just like me.
Yeah.
And so I was like, hey, I can do this.
Yeah.
So that was it was more, honestly, I think it's more mindset really than anything else.
Really?
Belief that you can do it. Yeah.
Yeah, they say it's like, what, 80%, belief that you really can, and like 20% mechanics,
Right.
actually doing it. Yeah.
Yeah.
Yeah, having a mentor, I think, is one of the most underrated things in today's culture, where one of the things I think Japanese society does really well is that like mentor-mentee relationship that they do. And actually, that's a good segue into you, Hayden, because I know you're kind of in a situation where you're getting mentored right now, kind of in the game and growing in it.
Absolutely. Yeah. I'm starting out my journey, obviously learning from Dustin. He's done 10 deals with a number of them going full cycle. So he's a great person to be learning from. And super excited.
So what's your story? How did you get into this whole thing?
So I started growing up. My dad was an engineer, and he always enjoyed real estate. And so over time, as a family, we got single family rentals. And he's the type of guy that liked to do everything himself.
Yeah.
And so it was just me and him. I was his, cheap labor.
Yeah.
And so I'd get dragged in all the projects, and so it would be me and him rehabbing these houses, and that kind of taught me the ins and outs of how the real estate world works. But it was a lot of work, and it was slow, and I always wanted to go bigger.
Yeah.
I was like, man, I see out there's these big complexes. People are somehow buying these, and I don't want to mess around with the small stuff anymore. I want to go bigger.
Yeah.
I've got a good foundation of knowledge because I've done, I've torn apart walls, I've torn apart floors, I've rebuilt staircases, done all that. But I just always had that dream to go bigger.
Yeah.
And so it's just a matter of trying to find somebody like Dustin that would, take me under his wing. Because it really is a business that you need a team. You need somebody to help you get started. Yeah. And so it's just a matter of time before I found that person.
Yeah. That's awesome, man.
Mm-hmm.
So let's dive into that then. So, I mean, finding a mentor is actually something that's really challenging for a lot of people, right? Because in order to deserve somebody's time and deserve somebody that wants to pour into you, you kind of have to add value to them in some way, right? It's not just like a totally asymmetrical relationship.
Yep.
You're kind of looking for somebody that you can give value to. And so I guess what would your advice be to somebody who is like, okay, I'm hungry, I want to learn, I want to grow, I want to get my foot in the door, but maybe I don't have a lot to value, to give right now, but I want to start learning and growing. Where would you recommend maybe somebody start?
Yeah, I think in general you want to, so I would go try and be around, whatever it is you're wanting to do, whether it's real estate or whether it's something else. You're the, what's the Jim Rohn saying? You're the average of the 5 people you hang around, and so it's like go hang around with, whatever. If you're wanting to get really fit and you're wanting to be a runner, go get into a runner group and start, learning from those people. And if you have certain goals and people already have achieved those goals, just go hang out with them, and then, just, find a way to add value, whatever that might be. In the real estate world, one thing that, Hayden has been, he's very much a giver just in general and kind of, and all that. And so I think one thing he's been really good at, he's been, anything that pops up, he dives in head first, and he's not afraid to work hard, and so I think it's just really just trying to add value, like you said, and obviously it depends on the scenario and all that, but people that are successful typically don't have as much time. And so if someone has more time and they're able to add value from that perspective, I mean, it's all, in most businesses, it's you either need time or money. And so, maybe someone has more of one and less of the other. And so if you can help, fill that gap a little bit, it'd be awesome.
Yeah, definitely.
Yeah.
So you raise a good point too, because when you say, oh, I do real estate, that could mean 1,000 things.
Sure.
Right?
Yeah.
Like,
Right, yeah.
Are you a real estate agent? Are you a broker?
Right.
Are you rehabbing stuff? Are you doing fix and flips? And so I know you're a syndicator, I think. Basically what we talked about last time.
Yep.
And just to give some context for everybody that's listening in at home, you've done $100 million in deals or something
about
like
90,
$90 million in deals. So this is not a small amount of money. This is quite a bit of stuff.
Yeah.
Let's talk about kind of your end of the biz. What do you do on the real estate side?
Yeah, there's a lot to it. there's there's investor relations, there's so there's people that have companies that have people for all these individual roles, but when you're kind of starting out, you kind of wear a bunch of different hats. But we analyze deals. There's there's property brokers, so I'm always talking to property brokers. We're always talking to lenders, so we're more or less kind of I don't know if the right phrase would be a quarterback or a coach, but more or less kind of a quarterback or coach, kind of coordinating a bunch of different things that are flowing around, all at the same time. So when we're looking at a deal, we're analyzing a deal, we're talking to lenders, we're talking to the property tax people, because especially in Texas, that's a really big issue. We're talking to our insurance folks, we're talking to our property management company who, that's their expertise. And so exactly what Hayden was talking about earlier, it's a huge team sport. Single family, I think you can probably get away with being more of a lone wolf, but multifamily, you really
need a crew.
You really need a crew. You really got to build up. Like we were on, we had a quick question, and so we called an attorney, that I've done a lot of business with the past few years, and it was 4:30 on a Friday afternoon, and we just had a quick question, had a 10-minute call, but he's another part of the team. You have to have that part of the team. Another thing that is big, especially with real estate, is taxes. People are looking for the depreciation. There's some well-off people that make lots of money per year that they'll go buy an apartment complex solely, there's cash flow, there's appreciation, all that, but they're going at it just more from the tax perspective. And so when we're going into a deal, we're looking at all these different things. We're talking to the cost segregation people. We're talking to our CPAs to see what investors could, what sort of depreciation they can get, because that's one of the biggest questions when people they're like, yeah, I want projections, I want the cash flow, what's the total return, all that stuff. But a lot of times, just as much or more, sometimes they're wanting to know how is that going to help their tax situation.
Sure. Okay, so there's a ton there, man, because you've got basically what your guys' business model is you guys are holding things more on the long term, right? This isn't like a fix and flip situation for you guys.
Yeah, that's correct. The intent is, that 5 to 7 year window, because the real estate market has gone up big time over the past few years. So we were buying, I know not everybody's in tune with cap rates and all that other stuff, but it's just a kind of a rate of return, or more or less. And so a few years ago you were buying stuff at an 8 or 9 cap, and now it's a 6 cap. And so it's just to give an example, if we bought at an 8 cap 2 years ago and you sold it at a 6 cap, and you did not increase the value of if you did not increase the NOI, which is net operating income, so you bought at an 8 cap, you sold at a 6 cap, you did not increase income, and your NOI stayed the same, you made $2 million.
Wow.
And that's what's happened across the U.S. We're in Dallas, and so I know that better. So that's exactly what happened in Dallas for your people in Austin, something a little bit similar, but instead of a 6 cap, it's probably more like a 5,
right? Because
Austin's a little more popular.
Sure.
But yeah, so it's been nuts. So instead of holding more long term, we've because no one knew what the market was going to do, so we've sold a lot of deals. So of the 10 deals I've done to date, I've sold 6.
Oh wow!
So and we sold them within 2 to 3 years, because we're like, guys, we can make a lot of money. We can double or triple, your money in a pretty short amount of time. And yeah, I think we did a good job, but the market,
a lot of uncertainty.
What it did, and so let's take advantage of it.
Where are you guys at right now with, obviously there's 40 million people out of work in the country. We've got a lot of uncertainty in the market just on how long this is going to last, what this is going to be. As you're rolling around in investment circles now and kind of looking, has this changed deal flow and changed, what the future is looking like?
Yeah. So deal flow, and I'll let Hayden, if you want to jump in to, kind of address or talk about deal flow a little bit.
Yeah. It's definitely affected things. On-market deals definitely dried up. That's for sure. We have seen a spike in distressed deals. So deals that weren't in very good shape prior is just kind of open that wound. Yeah. So we're starting to see a lot more of those off-market deals, direct with seller deals, direct with lender deals, which we're having to get creative with a lot of those too. So we're being cautiously optimistic right now. Yeah. There's definitely opportunities out there, but you have to take into account all the different risks on the table too. Yeah. There's a lot of unknowns. So in our LOIs and our contracts, there's going to be a lot of contingencies, whether it be financing contingencies, timeline due diligence contingencies, and stuff like that. So I think cautiously optimistic is a good.
That's a good phrase.
For what how we're feeling right now.
Yeah, definitely. Okay.
One thing I did want to address because you were, I think you were kind of alluding to not only deal flow, but what does are people actually paying rent? And so to date, collections have been very good at complexes. So if they were doing well, if they were stabilized before COVID, they're still collecting well. If they were not stabilized before COVID, they're probably about in the same spot. Got it. And so what Hayden was alluding to, some of those deals, they're probably starting to panic a little bit, and that Band-Aid's been ripped off, and so they don't know how long this is going to last. But the question is right now, because a lot of our deals are doing just as well, if not, we've had some months where we're hitting all-time highs on rent collection, and which people may not really expect with all the people out of work. But one thing you have to look at, because we're mainly in the C-class space, working class, and so some folks that I know of are, between all of the stimulus and all this other stuff, they're actually making more money not working than they were when they were working, which is
unsustainable.
Unsustainable and just frankly weird. It's like, how do you get motivated to get a job? But anyways, those benefits right now end at the end of July, and so we don't know if they're going to be extended or what. But right now everybody has that safety net, so everybody's paying rent, but what happens when that safety net's removed?
So part of why I wanted to do this podcast, Hannah, is I think obviously we just printed a ton of money as a country with this stimulus package that you're talking about. And any time that we inject a massive, whether it was like the 2008 bailout or we're just putting a bunch of money into the economy, you see inflation start to happen, right? And the people who benefit from inflation are asset holders, right? If you own real estate, some type of an asset that rises with inflation, you do really well because if you have a $300,000 house and inflation hits and now this house, your dollar effectively loses value, and so it takes more dollars to buy the same house. Mm-hmm. Now your house is worth $400,000. Well, you just kind of rode that wave as an asset holder. The group that I'm concerned for in our country are the non-asset holders. I think we're going to create a really weird millennial generation that almost is like these Russian serfs from like the Soviet era that just didn't own anything, because breaking into buying that first time home of $400,000 or something might be more difficult if you've never been an asset holder. So part of what I think a lot of people struggle with is, how do I get into the game? Like, I want to break my foot in the door. Some of what you're describing is, Hayden, you were saying like, you got to know the right, groups. Like we have a lot of these distressed sellers. For anybody that's, what is a distressed seller? Distressed seller, obviously, is somebody who's either going through money issues, going through a divorce, going through a death in the family. There's reasons why somebody would need to get out of a piece of real estate that is more motivated than somebody who's not motivated. I guess. Right. And so finding those opportunities, a lot of that is how well you're networked and being able to know the right people. And so for somebody who's just starting out, I want to get my foot in the door. How would you recommend? I mean, how much money do you need to start? Is there a certain amount of money that you need to be able to?
Yeah. So the typical minimums on, and that was one thing that, kind of going back to where I started, I thought you had to have a crap load of money in order to invest in this. And you do need to have some money. There's different crowdfunding websites where you can get in as little as $500 or $1,000.
Like what?
There's I don't remember. I'm
Yeah.
drawing a
Yeah.
blank because there's a camera in front of me. But I can send you. There's a
Yeah.
few resources out there. But Grant Cardone has a fund. I think he's 500 or 1,000.
Yeah.
But
yeah. I've actually seen a couple too.
yeah. I'm drawing a blank otherwise. But anyways, but yeah, in general so we do private placements and we're doing, a lot of them are 506B, which 506B means we have to have a pre-existing relationship, and I'm not an attorney, but that's what I've been told.
Yeah.
And so, and then there's other private placements that people can put together. There's 506Cs. Those are 506B and C are the two typical ones. I've only done 506B to date. But the minimums typically are 25 to 50 grand is kind of where things sit. So, some of our investors, that's a pretty significant amount of money, and others, frankly, that's not a whole lot.
Sure.
And so everybody, everybody's kind of across the board. But in my mind, when, a few years ago, 10 years ago, I didn't know that people could get into apartments to, what the point Hayden made. And so I thought you need millions of dollars or at least $500,000 to get going.
Sure.
I didn't know, I don't want to say just 25 grand or just 50 grand, but you can get in for 25, 50 grand. Kind of get your feet wet and kind of see how everything works. People can use, if they have an IRA or if they have an old 401k, they can roll over into a self-directed account where they can then also participate, so they're not having to use cash. So there's different ways of going.
And you don't have to experience a tax event when you roll it over from a 401k or something like that?
It all depends on their situation, but yeah, if you have like an old 401k, you might be able to. I don't know they can talk to a self-directed IRA company, but you can roll it over potentially to self-directed IRA and then kind of invest through there.
For anybody whose eyes are glazing over on the 501b and all these stuff.
Yeah.
So every industry has a language, right? Like your auto
Sure.
mechanic, there's a certain language. If you understand the way that cars work and the people that typically get taken advantage of in the auto world, or when you show up to the auto mechanic, he says, "Oh, it's your flux capacitor." Is
Right. Right.
I don't know what that is. I guess it's $500, but real estate has its own language. There's a language to learn and all that, but it's not complicated. I think it's once you know it, and you can experience kind of just as you're a part of it, you learn and you grow. So for somebody, let's say, who wants to break into the commercial side, one of the things that I like about the commercial side compared to like single family residential is the deal itself is what qualifies on financing, right? Which is very different than if you're going to go buy just like a personal house for you and your family.
Yep.
Maybe can you speak to that a little bit, just on like how you look at a deal and see if this is a good deal or not?
Man, that's a loaded question.
Yeah.
Yeah. So one thing I was going to mention is, we do have some resources, so people they can reach out to us, and we have resources as far as education, stuff like that, to kind of what those deal looks like. But so if I'm buying a deal versus me being a passive investor, so I'll talk about me. I guess there's a lot of overlap, but me just looking at a deal in general to buy, to go syndicate. So there's a handful of things that we look for. One is probably the top one is location. Yeah. You can't you can change a lot of things about a deal. You can change the paint. You can get different tenants in. You can do a lot of things, but you can't change the location.
Sure.
And so location's number one. I think especially in what people are seeing right now is we were just declared in case everybody didn't know, we're officially in a recession.
Officially in a recession.
Yeah, as of recently. But so really looking at location, I think that holds true, especially in a downtime. You want to be in an area where there's lower crime. We're mainly in C and B areas, so we're not in the super fancy part of town, but we're trying to be around around schools. Being close to schools is desirable. If people have kids and all that, they want to be very close to that school, and so we try to be close to schools and churches, and We want businesses around because we want, to see economic viability, lower crime. So, those are
Strong
kind of
job market,
yeah,
maybe.
strong. Yeah. So to your point, especially with all the COVID stuff. So Las Vegas is not a place where, that's a real tough market right now, especially
Sure.
with COVID. And so, if you have a deal that's highly dependent, a lot of your tenant base it works at hotels and things like that, then that's not as desirable. You're wanting more of your essential workforce types there. But in general, we're, a lot of the deals we buy are built anywhere between the 60s and the 80s in terms of age. But we're looking at cash flow. Cash flow is important. We don't know what the cap rates are going to be in the future. We don't know how much it's going to appreciate, and so we're looking at cash flow, and we're looking at our ability to pay the debt service. It's called a debt service coverage ratio, DSCR, and we're looking at a strong ratio there, because when we're in a tougher time right now. If this extends, I think the average recession, I don't remember exactly, I want to say it's 11 months or something like that. That's typically how long they last. But when we're in a tougher time, you want to make sure that there's a strong ability to pay that mortgage. If you're right on that borderline of what a lender requires, that might be a tougher spot to be in.
Sure. So let's make it personal, I guess. So let's say for somebody like me, I want to get my foot in the door of start, building, I guess, like a passive. I want to have like a portfolio that I want to start building. I would love to have multifamily cash flow coming in, maybe have enough where I could hire a property management company to kind of help take care of some of the everyday stuff with it. Where would I start? Where would you recommend I start finding a good opportunity to dive in?
Well, if it, I guess, depends on if you're wanting to go own single family or small multifamily yourself, then that's one path. If you're wanting to, put your money into larger complexes, then that's probably a little different path. But I would work on, if you're wanting, especially if you're wanting to do actually either one, I would try to go to, I guess you can't go to meetup groups right now, but in general, I would find where those people congregate. So, in terms of multifamily, there's a lot of Facebook groups. So if you put in Texas multifamily, we have a Facebook group that's fairly active. There's lots of Facebook groups. There's probably a lot more in this. There's at least a dozen of them I can think of. There's probably about half a dozen of those that are pretty high quality, and people are very active and all that. So, again, it kind of goes back to, if you're wanting to learn something, you need to go be around people that are already doing what you want to do. And so going to those Facebook groups, when we can actually all congregate and meet up in person, meetup.com is awesome.
Sure.
For multifamily in general, there's lots of conferences and all that around the country as well. So, but just go around, get around the people that are already doing what you want to do, and I think that's a great start.
So then, Hayden, I'll throw it over to you, because I feel like you're exactly on the path of somebody who, dad was in real estate. I get it. I see the big picture. I know there's money here. I want to go, and this is a fun game to be a part of. How did you, obviously Dustin's crushing it and doing his thing. How did you first start being a value add to Dustin, to where it was just worth it for him to have you around and participating?
Yeah, it was actually a process.
Yeah.
I had some hurdles I had to overcome before I got to that realization too.
Okay.
Because there was a number of people that I actually offered to work for free. I was like, hey, I just want to be around the people that were doing deals, because I knew proximity is power.
Yeah.
If I get close to these guys, start getting familiar with the terms, I'll start to absorb some of that knowledge, and then I'll start to be able to know how to talk with brokers and investors and so forth. And a lot of those people turned me down.
Sure.
And I was like, what's going on here? I'm smart, I'm capable, I'm offering time for free.
Yeah.
What's going on here? And it took me a long time to realize it, but I was just asking for value, and I wasn't really giving them a lot of value.
Sure.
Because if I'm brand new, if I'm fresh, well, they got to teach me everything. So they got to hold my hand.
Yeah.
And so that was my kind of light bulb moment. I was like, wait a minute, I need to switch my pitch from, instead of asking for value, hey, let me turn that around. Let me see what skills do I have that can I actually add tangible value right now. And Dustin and I, we had known each other for a while. We'd gone out to lunch a few times, and I'd gone out to some networking events and stuff like that. And I was like, I'm not naturally a good networker, and maybe there's some other people that struggle. You know, I'd go to networking events, I'd meet two people, and, I'd talk to the same person for an hour and a half, and I'm like, this is not conducive to my overall goal, right? And so I brought the idea to Dustin of, I'm like, hey, I've got a marketing background. I think we could do networking better. And that was kind of how I could add value. Because I knew if I didn't have 10 people that had, say, 50 or 100 grand, I knew I could find them.
Sure.
And so I knew if I improved the experience at networking events and that became popular, then if we got investors out of it, that's tangible value.
Yeah.
And so I didn't have the relationships with brokers. I didn't have the relationships with lenders and all that stuff, like somebody who's experienced like Dustin does. And so there's two ways that you can really add value to somebody. You bring them a deal or you bring them money, and I knew a deal would be a lot harder because I didn't have relationships with brokers.
Sure.
They're not going to send a new guy fresh off the street a sweet deal. They're going to send a guy that they know can close, that they've done a lot of deals with, right? So I knew actually finding a deal would be a lot more challenging than finding the money.
Sure.
I didn't know a bunch of people, but I knew I could create something that could attract it. And so that was how I added value. And we started our little networking event. I think we had 25 people show up. We doubled it the next month. And before you know it, I think on our 4th month, we had to move over to the Westin in Las Colinas. I mean, we rented out a huge space in a really nice hotel. We hit 100 people at our fourth or 5th month.
Heck yeah.
We have sponsors and free food and it's a good time.
That's awesome.
Yeah.
Right on. Yep. So what did you do in this networking event? What made it so special to go to, and how did you, I guess, make it unique in that world?
So I knew my problem, like I said, was I'd talk to the same person forever. Yeah. And it's like nobody wants to exit those conversations and say, hey, I want to go talk to somebody else now. Like that's an awkward conversation.
Right.
But everybody's thinking that. And so we just acknowledge what everybody's thinking. It's like everybody wants to connect with a lot of people. Let's just kind of facilitate that desire. And so we separate the event where we have a portion of it where we have just networking, and then a portion we have a speaker. But during the networking, we say, hey, there's going to be designated times where we say, hey, mix it up, talk to somebody else. That gives them a graceful exit and say, hey, okay, now it's time for me to go connect with somebody else, and they can do the same. So instead of people walking away with meeting one or two, they're getting a stack of business cards, and so that makes them want to come back.
Definitely.
And so I think that's where the popularity kind of grew off. And then we paid attention to the little details. Most of the events were done at a restaurant where you got waiters. It's noisy, it's crowded. I got to pay for my own food, which nobody wants to do.
Sure.
So we said, okay, let's start paying attention to these little details and the experience that they're having, because there'd be a lot of events I'd go to, and parking would be tough, or seating would be hard. I could never find a spot, and it's too cramped. And it's like, am I really going to come back next month? Probably not.
Sure.
So we paid attention to all those little details too. Yeah. And I think the more you pay attention to the experience somebody has, the higher chance you have them coming back and saying, hey, I had a good experience. And they also psychologically compare it to every other experience that they've had. And if we stand apart from the rest, well, now we've just separated ourselves, and we started to create the place to be for networking, for multifamily real estate. And, there's only maybe one or two other events in Dallas that are, have that many people for multifamily.
Yeah.
So we kind of were able to kind of rise to the top and become almost like a household name in the multifamily Dallas networking space.
That's killer. Right on. So you brought up something that's good there. Basically, the two value adds that you can bring is either money or a deal to somebody. And I think you hit the nail on the head, man. Finding the deal takes a little bit more experience inside of the space, knowing the right people in the broker space, those things. Right. But finding money, obviously, is you're what is it, like you're 6 degrees of separation from anywhere in the world. So there's a lot of rich people that exist on the planet, right? Finding access to people that want to go park their money somewhere is a lot easier for the average person. What is, if I'm going to go if I know somebody that has money and I want to say, hey, listen, I got a guy who crushes it in real estate. He crushes the multifamily world. What can I tell him he can expect as far as a return? What's a good pitch for me to talk to an investor and say, here's about what you can expect if you go park your money with my friend?
Yeah, I mean, so most of the deals that are coming out right now, and it all depends on, I just saw a deal this morning with a little different metrics, but it's in a secondary market. So it's all about risk return, right? So secondary market, there's potentially a little more risk, depends on how you view it. So there's got to be a little higher return to offset that, right?
Sure.
So, but returns in general are, anywhere between 70 and 100% return over 5 years. That's assuming you sell the property. And then you can expect cash flow, depends on what market and all that. But you're probably, average over 5 years, you're averaging about 8% or so cash on cash. And most of the people do quarterly distributions. So, just to give you a number, so if you put in 100K, $8,000 a year, $2,000 a quarter, that's kind of what you could expect.
And then at the end of your 5 to 7 year cycle, you
sell, so you get your original money back. So so let's say the return is 70%. So if you put in 100K with all your distributions and everything else, you get 170K, back over that
in
5 years. Yeah.
Plus your quarterly distributions.
Well, 170 total. Yeah.
Total. Okay,
Yeah.
got it.
Yeah, that's with distribution.
Which still, man, that's wonderful. I mean, that's a phenomenal place to be.
Yeah, and so when you look at, so you look at that, and like you talked about, it's a need. Everybody needs a place to live. It's also, you're talking about inflation. Real estate's a hedge against inflation, right? Mm-hmm. It's tangible. You can go drive by it. A lot of our, some of the investors I work with, they won't invest in a deal until they get to drive by it.
Sure.
They want to look and feel and touch, and they want to make sure that, this looks like, something for them. And then, we talked about the tax benefits. There's massive tax benefits. Like I said, there's, some people that I know that make millions of dollars a year. They go buy an apartment complex and, kind of wipes out their capital gains. They're considered a full-time real estate investor. So they're in a little bit of a different category versus a passive. But for the most part, it can really be advantageous from a tax perspective.
Yeah, so. Definitely. There's a million reasons to go play in the real estate game.
Right.
I think as for somebody's personality type, to know if they want to go play in it. I mean, that's the challenge. I think is real estate's so big. If you're a really detail-oriented person, like you're numbers-driven and you like that stuff, I think being on like the deal flow side and I liked real estate because it's kind of like hunting for treasure, and
right.
Like you're panning for gold and a bunch of junk, and the cool thing is, I think with a lot of this stuff is it's like if this numbers don't add up, you just don't do the deal.
Yeah.
Right. There's
Simple.
right. Like
Yeah.
a lot of people have this such fear over like, what if the market goes down, or but you're not buying and hoping.
Yeah.
You're looking at the numbers ahead of time. You have a risk reward, set up. That might be also something that you provide as somebody who's been around. You probably have an Excel sheet pretty dialed in.
Yeah. One thing I was going to mention, because you were asking earlier what we look for. So if I'm investing in a deal passively, which I do that, I'm active on the putting deals together, but I have cash, and so I put money into other people's deals. I like to diversify.
Sure.
And one thing that I look for in a deal, and this is kind of something we look at when we're underwriting a deal, is I look at it's called the T3, the trailing three. So I look at what the property was making under the seller,
mm-hmm.
and then I look at the year one, which is once it's purchased, and so I compare. And so assuming the income doesn't go up from the seller to the new buyer. So I look at that to, if those don't go up, I look to see what that cash on cash looks like, assuming the income doesn't go up at all. Assuming, worst case scenario, COVID hits,
Sure.
and income's not going up, but I want to see what that looks like, and if I'm okay with that cash on cash at 0% increase, then that's kind of something I like to look for.
Okay, very cool.
So kind of worst case scenario.
Yeah, definitely. So when you guys are, I guess, looking for opportunities, I've always heard, you want to be the ugliest house in the nicest neighborhood, right? Or like finding those opportunities where, and that's an oversimplification, I'm sure, but finding the great location where there's opportunity for you to provide the value to the property, where you can increase the value to it. Is that true in the commercial side of things, or?
Not honestly. There is some of that for sure. We're looking at one deal in particular that I would say that would hold very true for. There's a lot of upside on that deal, but I would say not necessarily. I had one deal in Oklahoma City that we did, and curb appeal, there was some deferred maintenance, so we did, cure that. But there was a cable contract on there, and they were offering not only free basic cable, but free extended cable for all the residents. The retail value that was like $65 a month. No other complex around was doing that, and and we polled the residents, and they didn't really care about it either. And so whenever we purchased the property, we had about 2.5 years left of that contract left. And as soon as that contract was up, I ended it. And so the value of that contract was it was $42,000 a year for an expense. In order to understand what that value is, so you need a cap rate. So you do $42,000 divided by 8% or 0.08 to get the value of what that's worth.
Why 8%?
That's the cap rate in Oklahoma City.
Got
it. But anyways, so if you do that quick math, that's over $500,000. So it was a complete paper change. I paid no money. Investors paid no money. Our raise was about $1.5 million. So we just from that cable contract going away, we had a 30% return. We paid no money.
That's awesome.
Yeah,
right on.
That's the power of commercial real estate.
Yeah.
So you have economies of scale. You have things like that could really help out. So I really want to get you in the mindset of with single family, it's very true. You've got to put a lot of you got to put a lot of money into this. You got to it's a big, like you always see the before and the after. You don't need that big before and after with multifamily in order to really make a difference. Another just quick example, and I don't know the numbers off the top of my head, but if you increase rents on a 100-unit apartment complex, we're not talking a crazy amount. We're here in Austin, and rents are jumping up, left and right.
Sure,
right.
Sure.
But if rents jump up, let's just say $10 a month on 100 units. I have cameras in front of me, so now I can't do math. Even though I went to school for engineering, but anyways, so 100 times 10
extra
times 12,
$12,000. Yeah,
$12,000, and then divide by the cap rate here is quite a bit lower. It's not an 8. It's probably
6.
like a 5 or something for a C class. But so I don't have that math in front of me, but that's a lot of money just off a $10 increase.
Yeah, that's great.
Yeah.
Right on.
Yeah.
Okay, so if we haven't lost everybody on numbers and all that stuff, right?
Sorry.
Yeah, no, I think it's important that I think for anybody, right? It's just like understanding that there's a language here that once you get around it, everybody always, what's the Emerson quote? Do the thing, you'll have the power.
Yeah.
Everybody wants to like, well, give me the power and then I'll go do the thing.
Yeah.
And that's just not how it works, right? Like you have to just go do the thing, and then all of a sudden the power shows up to be able to do it. And so getting into this world and going and playing inside of this stuff, saving a little bit of money, getting into the meetup groups, I think that's great. Just getting around, rubbing shoulders with people that are doing it.
100%.
You'll learn the language. You'll learn how to start looking for stuff. You'll start forming the right relationships. Let's say somebody wants to play just passively with you guys, do you guys have any resources that you can kind of point some people to just where they can connect with you guys and be able to send stuff your way?
Yeah. Our website is Momentum Multifamily, and we can send you all the resources. We have a multifamily 101 guide that we've put together, and we have an online Facebook group. So yeah, and we'll supply our emails and all that good stuff. So happy to help any way we can. We work pretty regularly with folks that have never been exposed to multifamily before, and so we're happy to help anytime we can. We get there's a handful of new guys that text us and message us pretty regularly. Just they just have random questions, and we're happy to help. We're happy to be a resource.
I'm curious. Let's say, I guess, Hayden, maybe this is a better question for you, but like, let's say, I want to jump into the game. I start going to the networking events. For me, I own a health and wellness company. My wife and I do have a little Airbnb business down here in downtown Austin. But when you started networking and you started introducing yourself to people, knowing that it's like, okay, I need to find people that either have money and then start forming relationships with people that have deals. What do you introduce yourself as? If you're starting to kind of break your foot in the door, who do you want people to know you as?
I just be honest with them. I just tell them, hey, I'm brand new, I'm real fresh, but I want to learn. These are my goals. This is what I want to accomplish, and just try to ask them as much as I possibly can. Most people are willing to be very generous with the information. Actually getting on the deal is another story, and that's a lot harder. But a lot of people, you ask them, and they'll just open up and say, hey, yeah, these are the steps you need to do. This is how it works. And so I just think being honest with people and saying, hey, this is where I'm at. This is where I want to be. What do you think I should do? Prior to meeting Dustin and prior to settling on multifamily, I did that with a number of asset classes, a number of different guys. I talked to a guy that owned office buildings, a guy that did retail development, a guy that owned triple net like CVS and Walgreens, and then of course multifamily too. So first of all, figure out what you want, have that goal in mind and understand what you're getting into, and then just proximity is power. Get around the people that are where you want to be, and then just start asking questions. Don't be afraid to ask questions. That's the biggest thing.
Yeah.
I've asked a lot of dumb questions, but I'm grateful I did because now I have that information.
Yeah.
And I think people appreciate humility, and people appreciate a willingness to learn too.
Yeah. Yeah, it goes a long way. It definitely does. Any closing thoughts? Anything else as far as just letting people kind of know where they're at, and from you guys?
Yeah, I guess I would urge people. And I don't know, everybody's seeing what the stock market's, it's up, it's down, blah blah blah. And I guess I would urge people to take a look at, especially if they have a few dollars, I would urge them to take a look at private placements in general, and look at owning a part of an apartment complex. Like we're talking about, there's other asset classes out there. I love mobile home parks as well. It's just it's a different type of multifamily. It's kind of the way I see it. But yeah, I think in general, I would urge people to kind of look at some other things. So instead of I talked to some of my friends that are more into the stock market and all that. So a lot of people accumulate money over time, and then you I hate to put it this way, but you hope to have as you retire, you have this big nest egg, and then you spend I forgot what the number is, but you're supposed to only take out 3% or whatever it is per year. So you basically kind of hope you die before you run out of money, which is a terrible.
What a
way
wonderful
to look
dream!
I know. Yeah. So what's great about multifamily and just private placements in general is there's the returns and all that are great, but so you can put money into a deal and you're getting cash flow off of that. So you're getting paid. Your capital still preserved, but you're your capital's still there, you're still getting paid, and oh, by the way, there's tax benefits as well.
Right.
So, one thing that Hayden and I were talking about the other day was, we're like, if someone had some cash, and instead of plunking down the cash for their kid to go to school, you could potentially, I don't have a calculator in front of me, but if you, let's say you had $500,000, you go put in a few deals, and then that's a heck of a lot of money.
Yeah.
I get that. But instead of paying $40,000 a year for your kid to go to school, you potentially go put money into a few deals. 8%, I think it'd be 8% cash on cash. You get 40, 50 grand, per year. So your capital's still there. You get money to pay for school for your kiddo. Plus you get, tax benefits from the apartment complex, and then there's tax benefits from the education write-off. So, and then at the end of the day, you still have your, it's not like the, I guess 40 grand times 4 years, 160 grand. It's not like that 160 grand is gone from the 500K. You still have your 500K, and then some. And so it's just, I don't know. I think, I think I would just urge people to look at private placements, see if it's something that works for them. I personally, I like to drive by and be like, I might only own a few of the units out of the 100, but like, that's cool. Like,
Totally.
that's fun. And
Yeah.
it's, not to be a vanity thing, but you get to kind of brag to your friends a little bit too. Like, hey, I only own 2 of those units, but I own 2 of those units.
I own a
That's
very
cool.
small piece of that building. Yeah.
And one thing I did want to mention that we're really big into. So we have a meetup group, and we threw a charity event. And we threw a charity event last year, but we're really big about. So it's also a feel good business. So we get to do fun things at these complexes. So one thing that we did more recently with all the COVID thing going on is we practiced social distancing and all that, of course, and we were safe and had masks and gloves and all that. But we gave each unit, each family, and it wasn't like a huge expense for us, but we gave them each a pizza. And so, you might be like, oh, what, it's not, whatever. But, we got thank you cards from people. Like, no one else is giving away free stuff. And so we did that. It wasn't a huge expense. A lot of these complexes, 100 unit apartment complex, your expenses are $40,000 to $50,000 a month. It cost us $500 to do this. Our water bill goes up and down more than that. So, it felt good. We thought it was the right thing to do. And then on an ROI perspective, like, those people are going to stay with us because, wow, these people actually care about us. I don't know about the guy down the street, but these people care about us. And so it's also an avenue for giving back. And that's, I like that. I didn't grow up with a whole lot of money, and, it feels good to give back and kind of help, kind of elevate the community.
Definitely.
Yeah.
Definitely. Yeah. And I think, just breaking your foot in the door, the first deal my wife and I ever did, we bought a property here in downtown Austin in 2016, October 2016. We got probably one of the last condos for like $300,000 in the middle of downtown Austin.
Oh, wow.
And we were like the most expensive. We were like the highest paying person at the time. And we ended up renting it out through Airbnb as our first little deal that we did. And it was $300,000. We did conventional financing. I think we were in for like $15,000 down, I want to say. And then with closing costs, we had to put some new floors, new paint, stuff like that. It was like 20-something grand.
Wow.
In.
That's awesome.
We made more than that in cash flow on the Airbnb in the first year.
Oh, I'm sure.
Wow. Our appreciation, we sold it 3 years later for $586, something like that. It's like our cash on cash was just absolutely insane.
It's awesome.
And but so it's just every little thing. There's a deal to be had. There's a deal to be had everywhere, and it's just like panning for gold, and it's fun. So I appreciate you guys coming in and hanging, getting to chat. Go check out Momentum Multifamily.
Yes.
All right. Hayden, thank you for being here too, brother.
Thanks for having me.
Yeah, definitely. I'm excited to hang here more in the future.
Cool.
So, ladies and gentlemen, that is A New Perspective. Thanks for tuning in. Go out there and park your money somewhere in real estate. We're definitely going to see some inflation coming in here, and you want to own a piece of riding that wave as inflation happens. Much love.